Hey guys, Fernie Hours here with today's JAG segment. Today we're going to dial in and focus on property insurance. Obviously, for you folks that have been paying attention to the news, obviously we had a devastating loss here in Surfside, Florida, right in our backyard, and it's obviously been a loss that has caused a lot of emotions, a lot of different types of feelings, but at the same time, it's a loss that um, is close to the heart of JAG because it's what we do, you know, and that's insuring condominium associations in different parts of Florida and throughout the country. And you know, as I've watched this entire thing play out, obviously our condolences to the families and to anybody who knows any loved ones who are still maybe there and whatnot. But I wanted to dial in and talk about this today because it is the elephant in the room. Insurance is going to be a huge topic throughout this entire process, whether it's during the investigation process. Obviously, we're very still gathering data and facts from what the media is releasing. But what triggers this entire conversation and why I wanted to speak about this is because we've sat in many rooms um, in condo associations and explained coverages, talked to board members, and try to express the importance of buying the right property insurance coverage, the right liability insurance coverage, all of the coverages that an association needs. And I'll be honest with you, it's been very disappointing in many cases where board members have dialed in so much on, I want to save money and I'll cut insurance coverage here and there, and really at compromising the integrity of the association and of the building. So I'm here with our chief insurance officer, Leo Portis. He's also the head of our claims department, our risk management department, and I think there's no better chief insurance officer in the country than you, and somebody who really understands claims. And we're obviously very proud to have you. And
Appreciate that.
Leo, I wanted to talk to you because you have expertise in claims. This is what you do every single day. I've heard you fight. I've heard you become very frustrated in cases with associations. But when you think about what's happened at the Champlain Towers, when you hear about inspections that were overlooked, all of the noise that's going on, what's the first thing that comes to your mind as a risk manager and when you're thinking about this condominium?
It's a couple of factors of concern. I'm going to go backwards in time. 2018, there were mentions of reports, engineering reports that were conducted that revealed significant issues with the integrity of the entirety of the building. We come across some of those reports, none as flagrant as the one that is making the rounds in the news now. That this unfortunately these towers showed. Something like that comes through my desk. Obviously, we will make it a point to go and sit down with the association board members to discuss the huge risk that they are running. So explain to them, that this is not only a regular property loss. This is going to bring their directors and officers in play because of decisions that they made or didn't make. It's a huge liability case, in addition to a property case. And we would have made a case to try to push the envelope and trying to assist, the both the unit owners and the association board members to make the right decisions. This is a very peculiar case because the way that the loss occurred or the structure came down shows damage to only a portion of the building. So it becomes an interesting claim to sort out. There's stuff, believe it or not, that will be covered, and stuff that may be excluded on policies in the absence of a quite obscure coverage that at times is not discussed by the agents, and it's a disservice to the clients. And it's called Ordinance and Law. So Ordinance and Law is guided by statute in the state of Florida. It's statute 627.7011. And it's divided up into three sections. Section A is a loss to any undamaged portion of a building. Like in this case, we see that there's still a section of the building that is still standing. The second portion of the coverage is demolition costs to this undamaged portion of the building.
Correct.
And part C is the increased cost of construction to bring the building up to code. So what are the observations that I'm making here? Loss to the undamaged portion of the building. Obviously, in order for insurance to pay, in order for a policy to be triggered, there has to be damage to physical structure. The argument is going to be made that all the parts that came down of the building are covered because it was a matter of collapse. Well, what about the rest of that building? I'm going to give you a perfect scenario. Let's say that you have a $10 million structure. Let's put a ballpark figure, $10 million structure, and only 50% of that building came down. Technically, and in all their right, the insurance company is going to say only 50% of that is going to be covered. So you're only looking at a potentially $5 million recovery. But what about if the rest of the building, the integrity of that building is no longer viable? You're going to have to bring it down. You're going to have to incur the cost of the demolition of that side of the building. You're going to have to incur the cost of the clearing of the debris of that building. You're going to have to, because of the fact that it went over that 50% mark, incur the cost of replacing the foundation, ground pipes, sewers, anything that is underground, which is technically not covered on policies, is going to also be part of a potential ordinance and law claim.
And not including the increased cost of construction.
And the increased cost of construction is a whole different topic. Monster there. Reason being, we have a lot of old buildings, especially in South Florida. So you're looking at 30, 40-year-old buildings. The codes have advanced and change almost weekly down here. So things like upgraded windows. If you have a building of something like this happens, the insurance company will only pay you to replace the windows that you had. Now, if the code requires for impact windows or shutters to be installed, that's not covered. So you're only going to get paid for what the cost to replace the original window was. So now you're in the red for any upgrades to code that you may require. We've seen that on other cases that I've dealt with, where even in smaller cases, you have a building fire, 2-3 units come down, 2-3 units out of an 8-unit building. The city required the owner to replace all of the electrical components for the entirety of the building. Luckily, we had a solid policy where the insured did have good ordinance and law coverage, and we were able to recover the differences between what they had before. This building was a 30-something-year-old building, to bring it up to code to 2020, which was when the claim occurred. Correct.
Yeah. So, and Leo, my as I said, this is one that we're gonna really focus on, because I think it's one that's gonna really impact the insurance industry long term, and how insurance companies, in my opinion, may even make underwriting guidelines that much more stricter in South Florida. But one of the most frustrating parts for me as an agent is the fact that people, it's unfortunate. And again, a lot of empathy to what I'm saying. I wish I wasn't having this conversation, but in many cases, we've had assets that we've told people this is a life safety issue.
Yeah.
And again, everything becomes such a money play. And what I don't understand is, why would you not want to improve your asset, which would then make it much more attractive, give it more value, make it much easier for lenders during a walkthrough to maybe entertain refinancing your asset. And the truth of the matter is, as a board member, you have a fiduciary responsibility to do what's best for the condo association.
Yes.
Now, I don't know enough about the board at the towers. Obviously, I don't want to speak on behalf of anybody. But what I am saying is, I've sat in other boardrooms where, truthfully, the board members aren't even qualified to be making these decisions.
That's a great point, and that's where the role of an agent comes into play. The role of a good agent. We lead with transparency. That's what we do, and that's one of the things that. And as I indicated at the beginning of this segment, that coming across my desk, us being able to, what we do, risk management, loss control, pre-underwriting, pre-binding of the policy. These are like you said, life and death items to point out. And you rightfully indicated these board members may not be qualified. They may not be engineers. They may not be, used to the litigious environment of South Florida. So there's many factors that come into play. They're making decisions based on, A, budgets, B, on emotions. They want to come out as superstars. They came in on the budget and so on. But some of these things, like in this case, are grave matters. And the other thing that comes into play, and unfortunately, is the mentality of some unit owners. My understanding is that there were discussions regarding assessments that were needed in order to bring this property up to.
I actually read that it was a $15 million special assessment, which if you actually look at it and you take the $15 million and you divide it by the amount of units and what it's going to do, it's probably something it makes sense.
100%.
Especially
bring up the
from what the
value.
pictures I've seen. Again, I'm not a contractor. I'm not I'm not a shell guy, but it does cost money. And the worse it gets, the more expensive,
And what they also need to understand is that them having their hands in this type of report, it's unfortunate, but it's lives in their hands. They knew about these considerable structural issues. Compound that with that 2020 report where there were indications of the ground settling. You put those two together, and that's a no-brainer. I think that, and again, all respect, we don't know what happened in those meetings or decisions that were made, but it's concerning to know that they're putting those two items together, having the experience of claims, catastrophes. There's something in me that says that I think we could have, as representative of the association, could have done a better job.
Yeah, and again, we speak with great empathy and respect because we don't have all the facts. The purpose of this segment, though, is because of the frustration I felt, right, or we all feel here. Obviously, if you know JAG and you're a client of JAG, we lead with claims advocacy. We're all about risk management. We put our money where our mouth is. We have 6 in-house risk managers. We make sure that we walk through the property, and we do all that. And again, I'm not using this to sell anybody insurance, but my point is, it's because we do it because we understand that it's important. Yeah. It's a life safety issue. But more frustrating for me, and it's why I wanted to bring this to light, is because Champlain Towers, unfortunately, is one example of many. The sad part is that they happen to be the one that absorbed this tremendous and horrific loss. But you and I both know there's other associations out there that are cheating the system, cheating their residents, cheating their property managers, cheating themselves. And it's all because the root is we don't have the money. And when you walk into these boards, these associations, if you move into a condo association, and if you're maintaining the property and you're collecting your association fees and whatnot, you should be in a financial healthy state. And obviously in some cases there's always there could be situations where they may or may not have money, but my point is they have to, these board members, and I'm calling board members out, okay, I'm gonna, it is what it is. when there is an inspection report and there's a walkthrough of your asset and your insurance agent that you've entrusted or your insurance company you've entrusted and they're telling you to do something, you got to do it because it's in the best interest of the association. And I'll end it with this. In too many cases, I've heard, I'm going to wait for their storm and let the insurance pay for it. And that mentality, especially down here in South Florida, I'm just speaking facts. Let me remind everybody, the insurance company is not in the business of, replacing your roof and helping improve your property. That's not what their business is, or even mitigating your property, right? That's the responsibility of the insured. The insurance company all they're doing is taking on the transfer of risk. Yeah. And we have to stop with this mentality that the insurance companies are supposed to be paying for and bettering the improvements of your property. That's not their job. Yeah. Their job is to cover a covered loss, a covered peril. And I think that unfortunately this horrific tragedy should be an eye-opener to everybody in the association community world. That, hey guys, it's time to stop being cheap and start looking at the association as a business, as a long-term play, and as your asset, where people live and avoid any other tragedy. So that's my closing argument here.
And at the end of the day, these board members, in their majority, are residents of these places. It's my understanding that the vice president of the association might have been caught in the disaster. And that's extremely unfortunate. But that just goes to show you, it is part of where you live. This is your home. That deserves a greater degree of care and responsibility. And on the point that you made regarding the thought of them looking at insurance companies as a piggy bank, going back to this ordinance and law deal, even them having that and them having that mentality, they might not realize that they don't have that piggy bank in their hands, even if a claim were to occur.
Correct.
Because all of these factors come into play. It would be wise for not just associations in this case, but any even a homeowner, when you're looking at that ordinance and law coverage, they find an agent that's going to go fight for the majority or as much coverage as they can possibly get from the typically embedded number that the carriers put on there. But get an assessment done, get an appraisal, a solid appraisal done, somebody that has the knowledge of, existing current building codes or anything that may be coming down the pipeline that you might not know of. So getting that appraisal done and looking at that potential increased cost of construction is vital to any insured, whether it be on the business side or on the personal side.
Correct.
So again, going back to it, ordinance and law, one of those very hidden and very unspoken type of coverage in policies, and it can get tricky. It can, in this example that I set forth, you might be looking at a $10 million building, you get $5 million back, and you're at $5 million in the hole, plus. So, and just because you don't have enough, ordinance and law coverage to pay for anything that's not covered.
Yeah.